2020 sure has taken its toll in virtually every applicable variety. From healthcare to the entertainment industry, it seems no rock has gone upturned, especially when it comes to independent business owners and those who work under them. The rising tide of unemployment and the need to self-employ this day and age has caused a lot of businesses to think outside the box when it comes to financing, and none more so than the home-sharing vacation rental marketplace known as Airbnb. Considered to be the largest online travel service with a market value of $80+ billion, it alone far exceeds its competitors such as Expedia and TripAdvisor, to name a few. However, it is actually viable for Airbnb to be worth more than these profitable giants when Airbnb literally lost nearly $700 million. This really sums up the whole tech IPO space currently, where you see companies such as Snowflake, DoorDash, and notoriously Uber. Uber has a reputation of literally only losing money, including last year when they lost $8.5 billion with a B, as well as their SEC filings literally saying that it may never reach profitability. This shows how overvalued the tech sector is that a company losing billions can break the 100 billion barrier. However, this is about Airbnb. Nothing stays on top for long, as just recently it was reported on the Nasdaq that Airbnb's stock fell more than 8%, following a week of what can only be described as a pure explosion of profitability when Airbnb's shares skyrocketed from $68 a share to almost $165, closing at $144.71, giving it a market cap of $83 billion. That kind of fluctuation definitely has some Wall Street executives feeling wary, and as they say, never count your chickens before they hatch. Analyst Robert Mullins was quoted as saying, "Investors we've spoken with, like Airbnb's business model and wannabe long-term holders, are now looking at selling the stock because they no longer feel comfortable owning it, trading at a 300 to 400% valuation premium." This was all shortly after the company decided to go public for the first time and publicly trade its shares. Airbnb isn't the only home service to open its doors and face potential scrutiny with its market value. The popular home food delivery service DoorDash also recently had an IPO that made the company worth north of $50 billion. Airbnb is playing it safe though. Sure, they roll out the red carpet a bit on day one, but they know if they push share prices too high, it could scare off potential investors and sour the potential for future IPO deals. CNBC senior markets commentator Michael Santoli tweeted, "Anyone talking about supposed money left on the table by Airbnb must acknowledge that Uber, Work, Spot, and Z spent many months under their opening day price. There's no transcendent enduring wisdom contained in the initial print. So obviously there are some who believe in what Airbnb is doing, versus others who think the company missed a major invitation to raise its shares even higher." If this is your first time watching one of these videos, let us know what you think about Airbnb's current trades in the comments down below. And make sure to hit the bell icon so you don't miss out on any of our new and upcoming content. We make videos on all sorts of topics regarding business, so come aboard and don't miss out. One of the biggest questions to ask is why Airbnb is so adaptable in today's current market. Well, the proof is in the pudding, my friends, and it's of the simplest answers. Why pay for a fancy, expensive hotel when you can pay an extraordinarily smaller price to stay in a stranger's home? The major contributing factor is that it's all about price and availability, and the idea that more people are willing to sacrifice comfort for cost. Sure, you could pay $300 for a stay at a fancy hotel for 3 nights, or you could spend, let's say, $77 for the entire 3 nights in a home someone has kindly opened up for you. Which do you think most people would choose? The idea of quality over quantity rings true even further when you think about availability in most areas, and it's exactly why a company like Airbnb even exists. Hotels and motels fill up, especially when you're traveling amongst many other people, say for a convention or expo, and major chains know this and are more than willing to gouge up the price because they know you're a potential client in need of shelter. But wouldn't it be easier to find a booking where you wouldn't need to worry about overcapacity or exorbitant pricing? The most you'd have to do is follow the homeowner's rules and clean up after yourself. Seems like a pretty fair trade if you ask me. What's interesting to note is that just over 50% of Airbnb reservations seem to be in a general area of about 300 miles of the consumer, which makes it a much more enticing option than any hotel chain, which along the road can seem far in between. And of course, no algorithm is perfect, so it's a good idea to take it with a grain of salt and know what you're getting into when it comes to staycations. Research is your friend, especially when it comes to extended travel in a post-COVID world. Staycations, in fact, seem to be much more accessible with things being the way they are, and it's more than likely to stay that way, at least for the foreseeable future. That, my friends, is why a company like Airbnb is most likely to be profitable in the future. It knows what the younger generation is looking for when it comes to traveling and expenditures. It supplies within the demand and cuts out the middleman and makes one of the most stressful parts of traveling at least just a little bit easier. And a business model like that is sure to take you a long way. Knowing your audience and how to better benefit their needs is more than a safe bet when it comes to operating an independent function such as housing. We've seen it already in the self-serving industry with DoorDash, Uber, online consumerism. Everything is slowly becoming automated, and it stands to reason that it shows no signs of slowing down in any regard. Having something at the press of a button is the more viable option that more and more people are deciding to take, as opposed to using more and more time and energy to do something. These companies understand that consumers are changing and willing to take a loss for the time being to adapt, but that still doesn't make these money-losing giants worth anywhere near the tens of billions. Anyway, that's it for today, guys. Make sure to like the video and subscribe for more. Have a good one, y'all.